What's up, everybody? Good morning, good morning, good morning, or good afternoon, or good evening. Whatever it happens to be, wherever you are, hope you're having a great day. It is Friday, May 19th, 2023. It is 6 a.m. here in Houston, 7 a.m. New York, and it is noon in London, I think, and about 8 p.m. in Tokyo. So same a trader clocks above my head up here that I like to have and look at, only because I don't know, I think I've seen that in trading offices and stuff. So I was like, hey, I should have that in my office. Anyway, welcome to the 10k-MAX 10k to max funding challenge. Today is a big day. We're starting phase 2. We were able to pass phase 1 yesterday. It took 7 trading days to do that. We took 5 trades. So I'm pretty happy with that. 3 wins, 1 loss, 1 break even to get us through phase 1. And now we're on to phase 2. The goal of phase 2, all of the rules still apply. So bespoke funding, you have a 5% daily drawdown limit. And you have 8% overall drawdown limit. So my personal rules for this system and this challenge are to never lose more than 2% in one day. I can lose 2% and then I'm done for the day. So I'll never violate the daily drawdown limit, ever. Not ever. So that's one rule. The other rule is I can trade that 2% over as many positions as I want. I don't typically take multiple positions. I'm usually looking for my A+ setup. 1 shot, 1 kill. I'm going in for the trophy buck for the day. I'm trying to find the best setup that I can find. And so that's why we don't take very many trades. There's days that we won't take a trade. We may just watch the market. Like on Mondays, I don't typically trade Mondays. I will stream and I will read price action and kind of identify things I might be looking for if I wanted to take a trade. But usually Mondays, I'm letting Mondays just kind of set the tone for the rest of the week, set a range, and see what's going to happen, and give me a better understanding. But all that to say, I'm just here every day, Monday through Friday, and documenting my journey of taking a 10K account, spending $100 on a 10K account, and using the profits from that funded account once I'm funded, if I can become funded on that account, and using the profits from that to purchase larger accounts, and then use those profits to purchase larger accounts. The reason I went with bespoke funding, one of the reasons is they're a newer firm, but really they offer $2 million in maximum allocation for their 2-step challenge. Their website says they offer $4 million, but that's $2 million for the 1-step challenge, which I do not do, and $2 million for their 2-step challenge, which is what I'm going to do. So I'm going for $2 million maximum allocation funding on their 2-step challenge. So we're just going to basically be snowballing accounts, stacking accounts until we can get there. Obviously hoping to take some profits along the way, but in the beginning, all profits get reinvested into more challenges. So we'll see how this process works, and hopefully show some people that it can be done, and that you can start with a small account, and through self-discipline and execution of your setup, of your A+ setups with your system, we can make this happen together, and you can follow along. So I go for 1 to 2 risk-reward ratios. That's all I'm looking for, is low-hanging fruit every day. I'm just trying to eat every day, and the best way to do that is I'm not trying to feast. I am trying to just get a meal And that's what 1 to 2 gives you. So with a 50% win rate, which is I'm between 50 and 60% on my overall historical data. Doing a little bit better here so far, but I expect that to change. We're going to take losses. We'll probably take multiple losses in a row, but I also know that I know what my system is, and I'm not here to teach people necessarily how to trade as much as I am to show the thought process behind how to find an A+ setup, what I'm looking for. You'll probably learn something. You'll learn my system. It's really just based on ICT concepts. Just a very few simple ICT concepts that work for me. It's my edge. And as soon as you have an edge that gives you, or that you're confident in, that's when you're ready to trade. When you can execute at a high level every single day, that you're only taking the A+ setups. Venator trading. Venator is Latin for hunter. That's what we do here every single day, Monday through Friday, 7 a.m. Eastern. We are walking into the woods and we are trying to find that one beautiful shot on that one perfect trophy buck. So that's what we do, man. We're here hunting. Yesterday was a great trade and a great way to pass. If you watch the stream, we had one little snafu right before we passed. So I tweeted this out. I didn't need this whole trade to win. It did. I only needed it to get down to about this level right here, and somewhere in there, and that's all I needed for. Let me go down to the 5 minute, because that's where I was watching it when we passed. So this candle right here, where it wicked down, into my profit. And so in my trading setup, I have two computer systems. I have my streaming system right here in front of me with TradingView up, and my MacBook down here running all the streaming software. And then I have my PC laptop over here to my left, where I have my MT5 terminal on, and where I manage all my trades for all my accounts. So I've got some challenges, I've got some funded accounts, I've got this challenge, so I've got multiple accounts on here that I use MT5 to go back and forth on and place my trades. And so I only needed $125 yesterday going in. I risked 2%, which is $200. I only needed 125, which was less than 1-to-1. And so I was just watching the profits, and it dipped over the profit line, the $800 that I needed to make. And Bespoke Funding says one of their things is they say that it closes your trades automatically when you cross the profit target. I wasn't sure if I was going to trust it, and I'm glad I didn't, but it dipped into the profit target. It got up to like 803, 805. It didn't close. It started to come back down, so I reached over to grab my mouse and close it manually. And because I have two computer setups, I have two mice. I don't know. I use two different mouses. I don't even know what the right thing is to manage MT5. And so I thought I was on my PC mouse, but I was not. I was on my MacBook mouse right here, and I was clicking, and nothing was happening. It wouldn't close. And then I realized I was on the wrong mouse. So I moved my hand over, got on that mouse, and by the time I had clicked close, the trade had moved back up. And it was just under. It was like $7.90. It was like $3.50 away from passing. And I was, oh God, I was so frustrated, only because I was expecting the software that Bespoke Funding says that they have in place to close the trade, and it did not. I'm sure there's probably some timing limit on that, like, oh, if it goes a certain distance into profit, we'll close it. But I mean, it was in profit. It stayed there for a good 5, 6, 7 seconds. But there's obviously some latency between what this is happening and the monitoring on their software end. And so it's not like instant execution when it hits and crosses your profit target. Anyway, about 4 minutes later, I jumped right back in and got less than half a pip and made $10 and got it over the profit target. So we passed yesterday on live on the stream, so that was kind of cool. But this was a beautiful setup. Played out perfectly over the rest of the day. I tweeted that out on. If you don't follow me on Twitter, @Venator Trading is where we were, and where I tweet out the results of every position, whether I take them live or off stream. I tweet them all out over there. But this is a great trade on pound dollar yesterday. And it nailed it. If we were still, like, if this was a funded account, I would have let this play out and we would have been up 10% on the account overall at the end of this winning trade right there. So super happy about that. 3 wins in a row. So we took a loss on our first trade, we took a break even on our second trade, and then we had 3 winners in a row. 2 full winners, and then a very small winner to finish out the trade. So that's what 1 to 2 gives you, man. You don't have to sit here all day. You don't have to watch your trades play out all day. Typically, you're going to know within an hour or so whether your trade was right. Sometimes way shorter than that. But so into the 7 o'clock hour here. Let's take a look up and see what's going on the higher time frames, because that's really what is most important. And we're going to start with our dollar index today. So why is that not? Oh, there we go. All right. So dollar reached our objective, our weekly objective yesterday. Got up above that old high inside this weekly. This orange box is a weekly fair value gap. I'll show you that right here. There's your weekly fair value gap. Currently, we reached up into this daily order block right here. We reached up into that yesterday, and it got up to about 50% of the wick area, and we've fallen off. So you've got Monday right here, Tuesday with the low of the week. We called that live on the stream that was the low of the week, and we were expecting the dollar to rally up to our weekly objective, and it did it beautifully. So you had this big range day on Thursday. Often when you have a big range day, the next day you're not going to get a continuation big range day. However, at 11 a.m. Eastern time today, Jerome Powell, the Fed chairman, is going to be speaking. And anytime that guy opens his mouth, it can have massive impacts on the volatility in the markets, specifically related to the dollar and to indices. And if it impacts the dollar, it's also therefore going to impact the foreigns. So technically, we're starting the challenge on bespoke funding. Bespoke funding does have a 3-day minimum trading days. So they have no time limits, but they do have 3 minimum trading days. So I have taken a 0.01 lot trade. I'm not counting it as a trade. It didn't make money. My account's still at $10,000. It was really just to start the clock on phase 2, so that if we pass within 2 days, we don't have to sit around and wait 24 hours to place a 0.01 lot trade. So we went ahead and started that clock yesterday. After we got our credentials, we passed. They sent our credentials over. I started the clock yesterday. So technically, this is day 2 for as far as bespoke funding is concerned on their back end. This is day 2 for me. But it's day 1 technically. It's day 1 that we're actually looking for setups to start trading and try to pass and get 5%. So we reach 5%. Then we move into the funding stage. Once we're in the funding stage, then we have 14 days to receive a payout. I'm going to just monitor this on YouTube so that I can keep up with chats and stuff. All right. And very quickly, I just realized I need to go take care of something with one of my dogs. So I've got to get, give me just, I'll be back in a couple minutes. All right, back. Sorry about that. All right. It's funny, I was watching back yesterday a little bit of the stream because I wanted to watch my reaction when we passed but didn't pass on that win yesterday. And I realized, man, God, I play with my nose a lot. I need to stop doing that. Anyway, so here we are on our dollar. And yeah, we've reached up into this order block right here. We've closed in that fair value gap on the weekly time frame. We've taken out this old high right here, this old swing high. So we've cleared out all the liquidity up here, and now we're back into a premium. You do have a small fair value gap on the daily time frame, still above right here. That does coincide with that daily order block level. So you've got that fair value gap on the daily, which we have reached up into about 50%, and then we've pulled back now from yesterday and then overnight so far on the dollar. So what expectation do we have? You do still have that fair value gap to fill. You don't have to. You can see price does not have to fill fair value gaps to fall away. They just need to get into them, and it's done that. It filled in the big weekly, and now it's reached into the daily fair value gap imbalance above it. There's also another one up a little bit higher still. So you had this aggressive run down. You had 1, 2, 3 drives down into this monthly imbalance, and now we've reacted off of the monthly imbalance down here and rallied back up. So, from this leg down, you could expect the dollar to get up into this level before and maybe get into that fair value gap. I don't think it's going to do that today. Now, again, Powell is speaking, so he could say the wrong thing or the right thing, and this thing could just rocket up and finish off the week straight up. It's Friday. We'll see if we get a beautiful setup. We are bullish dollar and bearish foreigns, and so I really only want to take a trade, a sell. That's what I will be looking for on the pound or the euro. So yeah, I don't know. We're just going to watch and wait and see. I don't want to say that I'm not going to take a trade today, but I'm inclined to not. And I mean, if we see a great setup, we see a beautiful breaker with a fair value gap inside, we see some liquidity getting grabbed, and then we see a move, some structure shift. I mean, we'll take the trade. I take every A+ setup that I can get. I just know from experience on days like this, after you've had 3 days in a row just straight bullish with no downside. You've only had buy side delivered. You've had no sell side delivered. You have had a nice pullback overnight. So I do like that we've had a nice pullback. In fact, you can see we've reached into this big buy side imbalance here. This is inefficient price action, so price needs to come back and redeliver into it. You have another one lower, and then you've got your 4-hour order block further. So it could still make a deeper dive before it wants to turn around there, but that could be far enough. If you look at the 1 hour, you can see we have cleared out liquidity. We've reached into this buy side imbalance. You do have the 1 hour order block right here, just a little bit below. So you can see we've had an aggressive run down overnight with London. You've got your Asian highs up here. You've got yesterday's high that Asia could not take out. So you do have relative equal highs up here. That could be the target for buy side. We get a spike. Maybe it's the news that spikes up, grabs it, and then we end up closing back inside here some today. Or you just rocket up and make a new high for the day, take out yesterday's high and make a new high for the week. So I don't know. I want to see a bullish dollar so that I can see bearish pound or euro, so that I can trade in line with the overall trend, which is still up for the dollar, down for the foreigns. So that's kind of my analysis here. I'm just going to kind of wait and see, does this price want to make another dip? You've had a break of structure here. Some displacement down. It didn't leave a fair value gap, but you're trading back up into this weird looking candle. And it's kind of reacting off of there. This fair value gap, this is the big weekly fair value gap. This is the daily fair value gap. So on the weekly fair value gap, we traded through it, and now we've traded back through it. So this fair value gap could, if we close below here, could start acting as resistance and send price lower. We haven't. If we close above it today, then next week I would expect that to act as support, and you could come into it and then rally higher next week. But today, maybe it's just consolidation. And in fact, I wouldn't be surprised if it is, only because Powell's speaking at 10 or 11 a.m., which for me, I'm not going to take a trade after 10 a.m., so I'm not going to sit around on the stream all day and just wait and watch for Powell to speak so we get a reaction. And I'm not probably going to take a trade. Like I said, so 10 a.m. my time is like 11 a.m. or 12. If I'm not in a trade by that position, especially on Friday, I'm probably not going to get in one. So I don't know. We'll see. Again, just kind of waiting and watching. So let's go jump over to the pound. Let's jump up to the weekly because I want to show you this. We had our open, our high, which we called on Tuesday, and then we just shot back down. We've made a new low of the week. We do have some liquidity resting several liquidity markers resting below us on the weekly time frame. But we've had a nice pullback this morning, and this order block right here, we haven't gotten to it yet, so that's kind of where I'm anticipating looking for something short today. Is right around this daily order block. And I'll show you on the 4-hour and the 1-hour where exactly that might be, because I've already taken a little peek in here. This is all the analysis we've done. We called this sell side liquidity after it reached up into that. This was last week. We were like, there's a ton of sell side. It's probably going to dip down. It did, and it's just stayed bearish since. We've had a breaker structure with displacement, and now we're coming back up to see if this daily order block is going to send this lower into these liquidity points down here. My first target, over my long-term target, not going for 1 to 2s, would be reaching for and making a new low today, or but it doesn't have to. It could just consolidate and pull back all day today until Powell speaks. And so I don't have high hopes. So we're inside this 4-hour order block here. This is, if you look on the daily, if I mark, I'll mark this a different color so there's not just a bunch of random red lines on here. We'll make this how about yellow. So this is the low of that order block right there, the low of the wick. If we jump down in here, you can see we have a nice 4-hour fair value gap up here that also lines up with our trade from Wednesday breaker block. Beautiful little breaker block that we have yet to get back up into. It came close and then pulled away, and we actually were able to get that winning trade right there. But we haven't yet retested that 1-hour breaker right here. So maybe we get up and take out this high. We've reached above this high overnight, and these relative equal highs here. We've grabbed this liquidity. We've pulled back into this 1-hour order block. This 1-hour order block is currently holding. Above it, you have the low of the daily order block on our yellow line here. This is what you should be doing every day when you sit down. You don't just come in and click buy or sell. You should be outlining from top down what price is doing and where you want to see and what you want to see before you're going to take a move. 11 o'clock. So that's several hours away, which means price could just jack around in here before anything fun happens on Friday, and I will not be waiting around until 11 o'clock today to take a trade. Anyway, daily order block, 1-hour order block is holding. 30-minute is your breaker right here. We've had no pullback into it. You've taken out liquidity here, so price could start returning and respecting this 1-hour order block, which is also a 30-minute, two 30-minute candles here that you see. Right in line with our, this is where we took our, this is a 5-minute fair value gap right here. And it has still respected that on these last 3 30-minute candles. It's respected that 5-minute fair value gap right there, which is about halfway on that order block. That was a great trade yesterday, man. We had a breaker, we had a 15-minute breaker, we had a 1-hour order block, and we had a fair value gap inside all of that, and it was at an OTE of the last leg down. I mean, there were so many good confluences yesterday. That trade, I would have been really disappointed if that trade hadn't won. Realized this was not maximized. Let's get a nice, pretty big view up there. All right. So yeah, we're just watching and waiting, man. That's my pound dollar. I'm gonna kind of see, do we get a push up into this daily order block level? Do we get a push up into that 4-hour fair value gap right here, this imbalance, this sell side imbalance right here? Do we get a retest of this breaker, which would be about halfway into this larger 4-hour order block and the daily order block? So there's just a lot of stuff that I want to see price get up and a little bit higher before we get super excited about, hey, can we find a trade opportunity here? Or because the dollar has reached its weekly objectives, is the dollar just now going to start falling away? You've got a lot of liquidity built up now here on the downside. You just had an aggressive trend up on the 1-hour time frame. So is it now time to see a healthy retracement for the dollar? All of these are great questions to ask after a big, large expansion week down. We were able to, I'm very happy with our week. That's why I'm not going to try and push a trade right now. If we see a beautiful buck walk out in front of our blind, we're going to take it down. But we got to see it. It's got to be there. It's got to be beautiful. So the areas that I'm looking for are this daily. This is the low of the daily order block from way over here. So we had a bullish move up. We've had displacement back through it. This creates a daily order block. So we'll wait and watch. We also have your 4-hour gap up here. This could be a nice run up, a run higher up. On our 15-minute time frame, you can see we've taken out liquidity here on the buy side. This is your next level of liquidity that price could be aiming for, which lines up with that dipping into that 4-hour order block and tapping into that daily order block right here on the yellow line. So those are why we have all of our lines up there. The red lines are old liquidity runs, so relative equal lows from down here. This is the next, your red line down here is your next draw on an old low that we would be looking for price to run. So super happy with the week again, and I'm not anticipating, well, I can't say that. I'm always anticipating price to give me my setup, but I'm waiting for it. Yesterday we had to wait over 2 hours before we saw what we wanted to see, and we're able to strike. So we may wait another 2 hours today. I have time this morning. I have no plans today beyond just hanging out with my dogs and my wife. So, we'll stay on here for a good while. Again, 2 hours is about as long as I like to look at charts. Streaming does make it a little easier because it gives me something else to focus on and do, and it keeps my mind sharp instead of just doing stupid stuff. Let's look at Euro, since we're going through our pairs, and then we'll jump over to US30. We reached our downside objective, just like we did on the dollar. Interesting here. This is really interesting. I'm just seeing this. Euro took out yesterday's low. The dollar did not take out yesterday's high. So, and you'll see it. Let me show you on the 1 hour. It'll probably be easier to see. Here, we did not breach this level right here on the dollar. But on the euro, we did breach the low. Several hours worth of tapping below. So you had 4 hours reaching below yesterday's low, and now we're running higher. So that could be SMT, as ICT describes it, which is smart money technique, meaning when you have two correlations, so you have dollar and euro, when they do not line up, when one makes a lower low, in this case the euro dollar makes a lower low, and the dollar does not make a higher high, that means that one of them grabbed liquidity and starts moving away and the other didn't. And so that could be a reversal sign It doesn't mean a full trend reversal, but it does mean that it could be just an overall reversal. So here on the euro, you see the dollar grab that, and now we're retracing healthy amount up to this wick still here. This is the first place that I would anticipate price to want to drop below or draw up to. On the 4 hour, you can see it is fair value gaps to fill in here and here. OTE would be somewhere up in here, so which would line up with a wick, the low of that wick from the daily. So, you know, we're about to fill. We've approached that, but we haven't gotten up to it to fill in this imbalance here. Does price just stall out inside this imbalance and then with news drop lower or run higher? I don't know. 1 hour, we've cleared out liquidity. We've reached up into this 1 hour imbalance, and you have a 1 hour order block up here that could give us our first bit of resistance. 15-minute. Again, you see a lot of imbalances because we've pretty much only had sell side delivery. We haven't had a lot of efficient price action for the upside while we've come down. We've just been getting massive displacements down, and so you're expecting price to fill in these inefficient price action deliveries. 15-minute order block up in here, so lines up with your 1 hour. You have a little bit of liquidity above there, but this would be the first place I would be looking for some kind of reversal. And on the 15-minute time frame, that would look like getting a down candle, up candle to grab liquidity or into a PD array or fair value gap, displacement back below the down candle that started that move, and then we look for a fair value gap inside of there. So we want to see liquidity grabbed, which it has grabbed liquidity on this move up overnight. So if we get some massive displacement down with a fair value gap, then we can start trying to identify breakers. But around this order block on the 1 hour, the 15-minute, and filling in an order block over here, that we're waiting for price to get back up into this level. Let's jump over to US30 on the daily. We're just moving higher. Take this off here. I don't really like US30 right now. It's just junky consolidation. We're still inside a dealing range, a daily dealing range that we've just have been trapped inside of for a couple of weeks now, and so it's not fun. This was just a demo idea I had as I went to bed last night. It was like, we've grabbed liquidity, maybe we're gonna drop down. Obviously that was wrong and got smacked there. There was nothing on any specific challenge. It was just a demo idea. So US30, here we go. Stuck in a dealing range. If you have buy side liquidity up here, sell side liquidity below, I would anticipate price wanting to come to the top of this range, this dealing range up here. So maybe you can find an entry. Price is moving up before Powell. We're not just getting, we had consolidation all night. Is this a liquidity grab from these relative equal highs? Retest of this fair value gap here on the 1 hour that was respected here. We dipping back up into that 1 hour fair value gap right here and then see lower prices, or is this the start of a trend right here? Is this the start of a trend that's finally going to break us out of this range so we can start aiming for some of these highs up here? I don't know. And until we get out of that range, I don't really have any desire to trade this. This would be a 1 hour. These two candles, they're each 1 hour, but this would be an order block. So if you were looking at a 2 hour time frame, this would just be one candle. That would be an order block. If you get a close above here in the next 18 to 20 minutes, then you could anticipate price coming back down into here, into this order block right here to run higher. So maybe in the next hour you get something like that. And again, this is just that's what I would be. If you can get a close in the next 18 minutes, you've created this order block here. You could get a retest and then a run up. That is, again, I have no desire to trade this because of this nasty range we're in. Could easily just be grabbing some liquidity right here and roll over and come back down into the bottom of this range down here. So I don't want to, I feel like I'm guessing. I never want to feel like I'm guessing when I'm talking about putting my capital at risk in the market. I don't want to feel like I'm guessing. I want to feel confident, and I don't feel confident about that, but that's the best thing that I can find right there. And that's not even great. Pound, moving up towards our daily order block level. So we'll watch and wait and see if we're going to get any kind of reversal around that daily order block. You do have some, again, this is your 4 hour, the start of the 4 hour gap. Above it, into here, you have a 30-minute, beautiful 30-minute breaker that hasn't been tested at all, and you have a daily order block level here. So you've got some liquidity, a fair value gap, an order block, and a breaker on a lower time frame, all up here. That may be what so you can see this a little bit better. This starts the daily, this starts the 4 hour fair value gap, and this is your breaker. So on the daily, the wick ends there. So we'll just watch and wait. We're reaching back up into it right now. Almost there. So I like to watch on the 15, because if on the 15-minute we get a grab and then displacement down back below, kind of like that low right here, we'd look for a fair value gap somewhere right there. This is your breaker. Grab liquidity into a PD array, a higher time frame PD array, or a couple with displacement, and then you can look to target 1 to 2 on a move back down. And we don't need it. We don't need it to come down here. We need 1 to 2. That's all we need. 1 to 2. We're risking 2%. If we make, if we win our first trade, we'll be at 4% for the challenge, and then the next trade we only need to make less than 1. Similar to yesterday, we only need to make like half. Because we risk 2, we just need to make 1, so we only need like 0.5 R. So we need 1 to 2 winner, and we're almost at our challenge, passing our challenge. And so that's why I want to pass my challenge, but that's why the power of my system is take your A+ setups and put yourself in the best winning position you can. If you take a 1 to 2 trade on 2% risk and you win, it's 4%. You only have to get to 5. So one full 1 to 2, and you've seen what we can do on 1 to 2s. We're fairly consistent, and you don't have to do a lot of, your trade doesn't have to do a lot of work on a 1 to 2. What's that? I just saw something fly up on my screen. I don't know what that was. No viewers today. I don't know where our two boys were that were hanging out here yesterday. Maybe they found out, oh, we don't want to watch this old guy, because they were both 20 and 18. I wish I would have started this when I was 20 and 18. I think it's going to be hard. I think there's when I think about those guys that were in here yesterday, Corey and Muhammad. There's a lot of things that are very attractive about starting this when you're 18 and 20 years old, and then there's a lot of things that are working against you. Number one, there's not many 18 and 20-year-olds that I know of that have the emotional maturity and self-discipline in their lives that it takes to be a successful trader. They have a much higher risk tolerance and are therefore much more likely, because time is quote unquote on their side and they have so much time to master this, they're going to be way more willing at a younger age to take unnecessary risks and undisciplined approaches and not just try to find A+ setups. They don't, it's just the way they're wired at younger ages. And I'm not saying they can't. I'm just saying the odds are stacked against them. There are 20-something-year-olds out there right now that are making millions of dollars doing this. Paladin, I think is his name. I think he's like 23 or 24, maybe younger than that, but he's killing it. It can be done. It takes a special kind of 18, 19, 20-year, 21-year-old to be able to do this. And I think, yeah, it just, when you don't feel the weight of having to make this work perfectly, maybe you're still living at home, you have basically no bills. Again, you just increase the level of risk tolerance that you have inside of you. And really, you want to have a very low risk tolerance for this. You want to be able to, I don't want to put my money at risk unless I feel extremely confident that I have identified my setup. And at those young ages, number one, you don't have the experience analyzing charts. You don't have the experience watching price move. But you do have, sometimes a higher risk tolerance is really, really good in this environment. And so it's like I told them yesterday, the worst thing that a new trader could experience is good luck. So what happens is you experience good luck as a young trader. You got lucky and you weren't good. It wasn't because you executed a perfect system and you executed at a level that you needed to win. So I hope those guys make it. I hope they stick with it, because it could change the rest of their lives if they commit themselves to doing this the right way. It can change anybody's rest of their life if you commit to doing this, but especially those young guys. They think they have so much time ahead of them, and they do have a lot of time ahead of them. But that just means they're less willing to put in the hard work to get there quicker. It could mean a longer road if they stick with it. But I hope they don't. I hope they'll stick around and watch, and hopefully learn something and get some kind of education from this. And again, not necessarily trying to teach a specific trading system here. I'm really just trying to model what it looks like to find high quality setups that are according to my system, which you'll learn if you stick around here and watch. But it really is about, hopefully, no matter what system you're using and what pair you're trading, you can see it's possible to start with spending $100 on a 10K account and turning that into $2 million of allocation. Hey, Mohammed, just talking about you, man. Was wondering if you guys are going to show up today. Welcome back. How did your trading day go yesterday? Were you able to take this trade and get the full 1-2 win on this trade we took yesterday? I only needed a little bit to pass the challenge, but If you had stayed in that, like I would have, if I was funded, I would have taken that, and that would have put us above 10% for the account overall. But I just needed to pass phase one. Did you stick with this trade? Did you take that trade, or did you take a different trade on a different pair yesterday? How did that go on your 10K account? And I hope you had a good lunch. Nice, $109 win. Perfect, buddy. Was that on this pound trade that we called here in the live stream yesterday, or was that on something else? GU, cool. Good, man. Glad you're able to capitalize on that. We're just watching and waiting, man. Sitting around waiting. Powell speaks at 11 a.m. Chair Powell. And typically when he opens his mouth, the markets start moving. So I'm kind of anticipating a lot of just kind of ranginess this morning because the pound is correlated to the dollar and the euro is correlated to the dollar. I don't think the dollar is going to get much movement. I think we're going to hover around inside this area here before Powell talks. So I don't know if we're going to get a great trade set up today. This yellow line here is our daily order block that we're reaching back up into right now, right here. And this is where I would anticipate if price wants to go lower today, it's going to be off or around that level, which we have approached it. We also have a 4-hour imbalance right here above this wick, which lines up with our 30-minute breaker from Wednesday's trade that hasn't yet to be retested. So there's several confluences right here that I'm kind of waiting to see if price can reach up into. You can see on this 4-hour candle right here, we have an hour and 7 minutes left on it. There's no wick on the bottom of this 4-hour candle, and price does not like candles not to have wicks. The market doesn't like that. So knowing that we have a daily order block, we have a 4-hour fair value gap, we've got some PD arrays, imbalances, all of that up here. This is where I would anticipate price wanting to roll over today and give us some lower price action and finish out the week down here near these lows. Maybe it grabs this liquidity today, maybe it doesn't. But the sad thing is that because Powell's talking, we could just get consolidation. We had a massive move down, and typically after you've had a large expansion day, the next day oftentimes it's just a consolidation day. And excuse me, not great trading environment to find A+ setups. So we'll just watch and wait. We're in no hurry. Because we trade 2% per trade, or at least because I trade 2% per trade, a 1 to 2 winner, the next 1 to 2 winner I get, if I can find one on the first trade of this phase 2 challenge, that would put us at 4%, and then I only need another 0.5%, a 0.5 R trade like we did yesterday to pass phase 2. So we could pass this thing in just 2 trades, or basically 1 1/4 trade. So we're just waiting for an A+ setup. So 1 hour, you're reaching up into this 1-hour order block. You have some buy side liquidity up here. And you've got that breaker that has never got tested. So again, we're just watching and waiting, man. Mohammed, I know you say you live in London. Are you from there? Like, are you a native UKer? Or do you just live there now? And what do you do over there? I think you're 18, I think, right? I think you were younger than Corey was. So you just in school, man? You got a job? Or you just what's your story, bro? Gold. Let's take a look at gold. I don't really, I don't really follow gold that much, honestly. Again, you've had this massive rundown all week. Is it likely that Friday's going to give you another massive rundown? I don't know. On gold, I kind of feel like you're going to get a pullback and you just grabbed all this liquidity. It could be due for a retracement. If it wants to head lower, it may be that it wants to come up and down. You hate it. I have exams. I try to revise, but all I can think about is trading. My final year. Luton, currently in college. Is college? I don't know what the education system, what the verbiage is compared to over here in the States. Like college for us is like the actual, like high school is grade 1 through 12, and then you graduate high school and you go to college to get your bachelor's degree. Is it the same over there? Like that's how you guys talk about college, or is college like the ending of your kind of like primary education, and then university is where you go to get your higher education? I don't know what that means over there. Yeah, coming to the end of the semester, man. Okay, college for you is university for us. All right, so you're kind of finishing up what we would call high school. College for us is grade 12 and 13. Okay, so you have an extra grade. Ours stops at 12, and then we go to college / university. You guys have grade 12 and 13, and then you go to university. So are you 12 or 13? I'm assuming you're in 13 over there. Yeah, man, it's kind of hard. So it's 1 o'clock in the afternoon over there. Are you not in school right now, man? Are you sitting in gym class with your headphones on, watching? Or do you just have like half days and then you can come home and do whatever? Like, don't get in trouble, man. Oh. No college on Fridays for you. Cool. That's nice. Yes, I have a day job, which I really like. I work at a church. Have been there for 17 years. It's a big church here in the city that I live in, and they have multiple campuses spread out across the whole city, and I oversee all of the music. We have live bands at all of our churches, and so I oversee all the music and all the bands and all the musicians, and so picking all the music that we do, the administration side of scheduling all of our volunteers that play in the bands, and then actually leading the music at church, different campuses every week. So we have services on Sunday mornings, of course, and then we have services on Wednesday nights. We probably have, I don't know, close to 200 volunteers across all of our campuses. So I've been doing that for a long time. I love it. I love being in the nonprofit world, basically, if you want to think of it like that. But I like helping people, man. I like being with people and helping them walk through life and figuring it out. And yeah, so that's my job. It does give me quite a bit of flexibility on time and how much I can give. I don't have like a certain time I have to be at work every day. I mean, I have to be there in the mornings, but it's not like I have to clock in at a certain time. So I can sit here and stream every day, and then when I'm done, I'm done. I go to work. I don't work on Fridays. Fridays are my off days, so I just chill at home with my wife and the dogs. I'll go sit by the pool later. It's supposed to be nice out. We live in a little townhome / apartment community. It's brand new, super nice. So we'll just chill out here today. take the dogs to the dog park maybe. But yeah, that's my working. I would love to be at a place. Really the reason I started trading, it wasn't necessarily to leave the job I'm in, because I do love my job. It's very life fulfilling. I'm not getting rich off of it, and that's one of the reasons I started trading. And it's also like, I know I'm not gonna be able to do this forever. Like, there will reach a point where I won't be able to sing or play the way that I do right now. And I just know to be able to protect my family and my family's legacy, I need to be able to produce multiple streams of income. And this one gives me the highest income potential, and could change, it would allow me to leave when I want to leave, and I wouldn't have to feel trapped of, I have to stay here. I have to keep doing this. I think that's why most people do this, is they either, one, hate their job and they want to do something. Two, they want the freedom of time to be able to make their own choices and not have to do something. I think we're wired as human beings to be productive and to work. And we're not just wired to be hedonists, meaning constantly only seeking pleasure. I think our souls will wither away, and we'll shrivel up and die, and we will realize there is more to life than just seeking pleasure and riches and fame. Okay? This is just my personal opinion. I'm not trying to get on a soapbox. I just think we're wired and we're built to be productive people. So I want to be able to use income that I can produce from trading, and one, to protect and set up my family for the future, that my wife and I will be able to not have to have a regular 9-to-5 job. That's the main thing. I want to be productive. I just don't want to have to be locked in to needing to go to a specific place of employment so that I can survive. I want to be able to control that. And I want to be able to control how I'm being productive. Now, will I be able to pursue more pleasure than I am right now? Yeah, absolutely. I'll be able to have fun. That's one of the benefits of financial independence. You can do things that you never were able to do before. But that's my goal, is to get to a place where I don't have to have a job. If I want to keep working, I can. Or I could go pursue other productive things. I could start working on building other businesses. But being productive is who we're supposed to be, in my opinion. The goal is not to get rich and quit everything and just live on a yacht or live at your vacation home. That sounds pretty miserable to me. I want to be around people. I want to enjoy life, but I want to be productive. I want to be influential in other people's lives. I want to do community with people, man. Which is great for trading, because I'm in a couple trading communities. I've enjoyed getting to know people in there. Everybody's at a different place in life. Everybody has a different thought, philosophy about how they want to do it. I have no ill will or judgment against people who just trade and do nothing else. They just make enough money. They get up and they trade for an hour or two a day. And then they just watch movies, read books, workouts, take vacations constantly. If that's what they want to do, more power to them. It's just not how I'm wired. I'm wired to be productive. Like, I don't want to be bored. I want to be able to use whatever resources I have to create more resources and more assets. All right, so we've reached up into this daily order block level here. This yellow line is the bottom of the wick of that daily order block from over here. We're approaching this swing high, which is the beginning of the fair value gap on the 4-hour time frame, and then just above that you have the 30-minute breaker that has yet to be tested from earlier this week. So, we're gonna watch and wait, see what's going on. The euro has reached up filled in its fair value gap and imbalance here, and into this 15-minute, 30-minute order block level here. So euro could be reaching the spot where it's about to roll over. Dollar hasn't quite filled in its imbalance like the euro has. The euro's filled in that imbalance. The dollar has not. It has a little bit more room to go. So if it wants to reach into this order block here and completely fill in that imbalance, the dollar has a little bit more room to go there, which would line up with the pound kind of making a run above these highs and into this breaker. And we don't just jump in because it reaches up there anticipating a reversal. That's not what we're doing. We wait. We're not just waiting for price to get to this breaker and then jump in. We're not just waiting for price to get to that 4-hour value gap and jump in. We want to see now we're getting displacement up into buy side liquidity above this high, into that fair value gap, into this daily order block, into this breaker. So this is all PD arrays that we're anticipating price would run up into. We didn't know if it would. Just like yesterday, we thought it might make a pullback higher, but it didn't. And so then we were able to identify our 15-minute breaker, our 1-hour order block, a fair value gap inside, and we capitalized. And so we're looking for something similar again right now. So we wait. In the meantime, let's read some news headlines. Dollar retreats from highs, but debt deal optimism fires up investors. So I guess they're anticipating, they're saying it's optimistic that a deal will be reached before the US defaults on its debt payments that are upcoming. And so because of that, the markets are going to rally because everything's going to be okay. Sterling heads for second weekly loss as dollar surges. Well, actually, it's not. If you look at the weekly candle right here, news headline, it's pulling back to the open, which would mean there would be no loss. And in fact, it could have a small gain if Friday just keeps rallying up. This could be a bullish weekly candle. So unless the sterling gets some, the dollar gets some bad news and it continues to, or it's strong news where the dollar wants to strengthen, the sterling isn't going to end with a loss this week. It's going to end neutral or positive. This is why we're not just jumping into a trade. Getting a nice 15-minute rejection here. We haven't yet reached up into that 4-hour fair value gap. We're right at it, but we have yet to breach up into that. So I would anticipate price reaching up into that fair value gap, up into this breaker somewhere up in here. About 50% of that, 50% of this fair value gap is right about there at 2460 area. So 2460 is about where we would be if it gets to 50% of that fair value gap, which would be right about there. So that would grab liquidity. There's really no big fair value gaps inside the 15-minute range here. There's one, not really there. 30-minute. There's a fair value gap right here. Price rejected off of, and it's rejecting off of currently. That could be a turning point. I'm going to watch this on the 15-minute because I want to see displacement. We've had a run up. I want to see some displacement back below and create a fair value gap either on this 5-minute candle or on these 15-minute candles, because price is just aggressively running up into this. We're now dug into this daily order block. We've now dug into, did we break that high? What's the high there? 24,487, 24,483. So we still are not broken into that 4-hour fair value gap. basically dead even with it, but we haven't dug into it at all. So we're just watching. We're bearish. I only want to look for sells. Also know that this is Friday, and we've had an aggressive move down for 3 days in a row of just sell side delivery. And so Friday could be a reversal, but I'm not keen on counter trend trades. If you follow me, you know that. Euro still respecting this 30-minute order block over here. Dollar has some room to go, but it could just stop right there. US30 did give us that 1 hour order block, yeah, so I would anticipate if price is going to go higher on US30, this would be the area I would anticipate that happening. Respect this base here, this order block. Cent price is lower. We had displacement above, which gives us a break of structure, leaves some inefficiency for, we want to anticipate the price being efficient, and so filling in this inefficiency here, we want to see price come back down, tap it in, and then run up. Reach it up again. This yellow light is our daily order block. These levels that I draw on here and the reason price is reacting off of them are not random. This is how you trade. You come and you sit and you wait and you draw out your expectations. If price reaches and meets your expectations, then you can put your capital at risk on A+ setups. Otherwise, you do nothing. You're just watching. It's like I said yesterday, I love watching this. I love watching price play out. I love watching these candles print and watching how the market delivers itself into areas of liquidity. Over and over and over again. It's so repetitive. It's like the waves of the ocean. Not every wave is the same, but it's super repetitive. It just, you can anticipate a wave's coming in. You don't know what that wave is. That going to be a big wave, a small wave? Is it going to come far up on the beach? Not very far up on the beach. Is it going to make a big breaker, no breaker, like a wave breaking? Like you don't know. And that's what the market does. I love it. It's just beautiful. I tweeted earlier in response to someone that just like the market is the ocean, sometimes just a walk on the beach is what you really need to do instead of getting in the water and swimming. I love walking on the beach. I'm enjoying watching the ocean and being near the ocean, but I'm not getting in the ocean. And when you come to trade, you have to think of it like that. Like, just enjoy watching how price is delivering. Mark out your levels. Talk it out. Which is one of the reasons I'm doing this stream. When I teach and when I talk it out live in front of people, it makes me a better trader. It helps keep me from doing dumb stuff. And I've done plenty of dumb stuff in this process of learning how to do this the right way. So I mean, potentially expecting a reversal there. I would anticipate that if it wants to reverse, that's going to be a good spot, and it lines up with our daily order block and our 30-minute. So again, I don't just blindly go in and throw on an order at this level, like if price, just because price reaches up into there, I'm not just going to throw on an order. Because where do I put my stop loss if I do that? Where do I have to put it? If I just entered on that fair value gap, if we were just to put an order right there, I would have to put my stop above the highest fair value gap, which would be up here. And if I use the body of that candle to get a 1 to 2.2, look how much work that the next few candles have to do. I don't want to sit in a trade for 2 days for this to play out, which is what it could be. Which is why I use the higher time frames to identify areas where price could reverse, and then I go down to the lower time frames to look for a more refined entry that I can get a quick 1 to 2, a quicker 1 to 2, not necessarily a quick, but quicker. So I don't just enter there. If you're using the ICT 2022 mentorship model, you get a break of structure, you identify a fair value gap, you enter at the bottom of that fair value gap, place your stop above the candle that created the fair value gap or the swing high, and then you target the next area of liquidity. And you can do that on a 4-hour time frame. You're trading up into this 4-hour order block and a fair value gap inside of it, so it could just dig up into that a little bit and then flip over and roll down and take out these lows in this liquidity today. It could do that. I don't know, but I don't want to have that big of a stop loss, and I don't want to sit in a trade that long. So I'm anticipating price to dig into that fair value gap, and then once it's in here, I will look for here's your draw on liquidity. Not only is it a swing high, that's also the 4-hour fair value gap level. It's currently leaving behind on the 30-minute time frame and the 15-minute time frame. It just left behind relative equal highs now. They're almost exactly identical. So that's definitely going to get tagged maybe on this next 15-minute candle. If it pulls back and gives us a down candle, if this next 15-minute candle is a pink candle, and then we go into the second half hour, runs up, if this ends up being a down candle on this 15-minute, that would be a possible breaker in the future. So that means we get a down move, we get an up move to clear out liquidity into multiple PD arrays. Then we would look for displacement. So if this is a down candle, you would want to see price then come up, grab liquidity, reach into some areas into this 4-hour fair value gap, retest the 30-minute breaker, and then you want to see displacement. Oh crap. Then you want to see displacement down below with a fair value gap up into that breaker right here, and then you're looking for your 1 to 2 off of that breaker inside of a fair value gap, and then your stop can be, 9 or 10 pips, and you can get your 1 to 2.2. Then you don't need price to come all the way back down here. You just need to get a retrace of this leg up. And then if it wants to keep reversing, cool, you got your low-hanging fruit. You didn't need price to come do all this. You just need to do a little bit of work. So we'll see. Are you using Smart Prop Trader? Mohammed, either you or Corey was using Smart Prop Trader. I can't remember which one of you was. Who are you doing your 10K challenge with? Are you doing a challenge? I think you're doing a challenge, if I remember right. I'm just going to hop over and see what's happening on my Twitter. Trying to go on my Twitter account. I've only been on this Venator Trading Twitter account for a little while, a few weeks. Started with 0 followers. Currently up to 53 followers on Twitter. Would love to, yeah, I'd love to get that up to several hundred in the next month. That'd be cool. I'm not really sure. I'm not super savvy on how to grow a YouTube channel or how to grow a Twitter account. I should probably educate myself on that a little bit. My Funded FX, that's right. Great company. I love their CEO. I love what they're doing. No time limits. They're very transparent with, I don't know, they put out a video yesterday. I think it was yesterday. Yeah, I watched that yesterday. But they put out a video explaining how they operate on the back end of their prop firm and how they choose which traders to copy trade on and which traders they choose to not do anything with and which traders they actually will reverse trade with, meaning they will take the opposite position because the data says that they're bad traders, which is fascinating. So basically they were explaining if a trader has failed 8 or 9 or 10 challenges in a row, they'll go in when that trader purchases another challenge and they'll fade that trader. That trader is historically accurately wrong. And so they will be like, hey, this guy is always taking the wrong direction. So he's just our signal to go in the opposite direction. And so they'll use their master account, master funded accounts, the company's master funded account to fade those bad traders and make money. And they use that money to help pay out their funded traders. They don't copy every funded trader. They'll copy. It was fascinating. If you have a minute, some point, go listen to the CEO Matt talk about how they use their back end to trade on their master account, whether it's good funded traders, how they determine, do they just straight copy them lot for lot? Do they copy them half position, whatever that trader's doing? Do they not copy trade them at all? So they're making money from challenge fees, but they are copy trading. They have a copy trader. That's how they're making money. And so they will identify good traders and copy them and trade along with them. And they will fade bad traders. They will reverse trade on bad traders that they have access to. So it's very fascinating. I've often wondered how, are they actually in the market? These prop firms, do they actually have a master account that's in the market taking trades? And are they actually copying good traders? It makes sense that they are. So I tweeted out yesterday, I tried to reach them and be like, what is the consistency level that a trader needs to reach for you to determine whether you're going to start copy trading them? First time a trader, gosh. First time a trader gets funded. I don't know what's going on in my throat. Allergies, I guess. I guarantee you, a first time a trader gets a funded account, they're not just going into their backend software and turning on copy trading for a funded trader. They're going to want to see consistency. Just wondering, what is the consistency level that a trader needs to meet? How many consecutive payouts do they need to reach? What's the percentage profit on their payouts that they need to reach before they'll copy trade? He did explain a little bit about how they pick which accounts to fade. But yep, I'm watching. It did breach that high. Yeah, so until I see a break of structure with displacement to the downside, now we've grabbed liquidity. This is what I want to see. I want to see a liquidity run some stops back into a PD array. We have multiple PD arrays we're running into. We have a daily order block. We have a 4-hour fair value gap. We have this 30-minute breaker above us. The 2460 level is 50% of the 4-hour fair value gap. So until we see displacement lower and a change of structure with massive displacement, I'm not inclined to go short yet. You have this 5-minute down candle here. I like to see breakers form on like 15-minute, 30-minute, and 1 hour. That's where I like to see my breakers. I feel less confident about 5-minute breakers, but you do have it has reached in there, and we've gotten into that 4-hour fair value gap. So now we just wait. For a 1-hour breaker, we would want to see displacement down below this candle and a fair value gap inside of here that we would target as a way down. 30-minute, this is the candle. You would want to see displacement below on the 30-minute. Down move, up move to grab liquidity and take out an old high, and then displacement below that 30-minute candle. And if there's a fair value gap, that would be a unicorn setup. I love those. If there's not, you could just use the breaker itself as an entry, either the body or 50% of the wick or the wick. I mean, everybody has their different vibes. 15-minute is that 30-minute. These two 15 minutes are your 30-minute breaker if we get displacement below. But we're going to need to see evidence that the market actually wants to reverse and start targeting these lows down here today. The dollar has reached lower now. It still hasn't filled in its imbalance. The euro has completely filled in its imbalance, and it could be reaching up into some of this buy side liquidity up here. These swing highs, you got relative equal highs up here. You've got all of this area has some liquidity in it. So, things are starting to line up here for us. But this is only step one of the process. Is price reach to your point of interest? Yes, it has. But now we need to see it do things, create displacement away from it, and give us. I needed to see it violate bullish order flow. If I'm overall bearish, which I am, I want to see price violate bullish order flow, which means price needs to violate fair value gaps, imbalances, order blocks. Right now it's respecting bullish order flow. Here's what I mean. We came off down here. We had a run up and a break of structure. We had a fair value gap. Price respected this fair value gap into this order block. Price respected this order block. We've had a break of structure, created a new high. So we have a higher high, a higher low. We have a higher high. We created and left behind a fair value gap. Price respected this bullish order flow. It came in and rebalanced and tapped into this order block here and has then made a new higher high. Price left behind an imbalance. It tapped into it and now is taking out and reached for buy side liquidity into a daily order block and a 4-hour fair value gap. So it's respecting bullish order flow on the 15-minute time frame and on the 30 and 1 hour. Okay, so it's respecting bullish order flow. The 4-hour is still bearish. This is why we're bearish overall. We're in a downtrend on the 4-hour time frame, and price has been reaching for sell side liquidity until price breaks this high up here, this swing high. If we get a close above that swing high, then that would signal that the downtrend is probably over, and we're going to make a run up into this fair value gap and make a bigger dig than we got right here. Price reacted off of that fair value gap and just ran lower. We've now grabbed some sell side liquidity. There's still more sell side liquidity for the pound to get, but on this 4-hour, on this leg down right here, we're just now reaching back up into a premium level once it gets into that fair value gap where we are right now. So this is the OTE. We don't even fill in this fair value gap. So if we're looking for an OTE like this is an OTE of this leg down. This leg, we had an OTE pullback. You see this, now we're getting a pullback. And there are people that are like, oh, price is reversed. We're going up. We're going to be bullish. Well, no, price is just retracing and providing efficient price action and providing buy side to these areas. So we're getting a big pump up now into our 30-minute breaker where we identified a move on Wednesday. This is a breaker that hasn't been tested, and so we'll see. There's no real fair value gaps in here that I would be seeing if price respects again. Nothing on the 30-minute. You've got this 30-minute order block right here, which lines up with your OTE area on the 4-hour time frame. So that could be an interesting spot where we see reversals, but all we're getting is buy side delivery right now, as the market is anticipating, it looks like. So it's the 9:30 market open. That's why we're getting this pump right now. Man, that would have been a good trade. It didn't come down quite, didn't come all the way back down to that order block, but that would have been a good call on the US30. It didn't come down quite far enough. I wanted it to get down into that fair value gap. Didn't do it. Euro running higher is taking out buy side liquidity on Euro. Again, all of this is fantastic. I'm glad it's reaching into our areas of interest. Making a pretty good dig into that daily order block. It's digging now. It's reached the 50% level of the 4-hour fair value gap. And we're reaching our next level that we're interested in is the beginning of the OTE level, optimal trade entry level, which lines up with your 30-minute order block here. We are now back into a premium from this move down. So if this is your dealing range, this leg down, you're in a premium, you're above 50%. There's no fair value gaps here that really interest me. So this order block is where I'll be interested to see, does this 30-minute order block inside of this 30-minute breaker, is that the place where we see the dollar has now filled in its imbalance. It's reaching, looks like it's going to reach down into this to grab liquidity below this level here. On the 4-hour, you can see there's still some imbalances down here, and this is the start of a 4-hour order block here, right here. So imbalance, order block, it looks like it's going to dig down into there a little bit. And our 4-hour fair value gap is all the way up here. It's approaching the close in of that. It's also approaching, let's see, 50% of that daily is about the top end of the OTE area. So this is right here is about 50% of the daily order block, if I read that right. So it's all lining up. Now we're just waiting to see a shift in market structure back to the downside. 30-minute time frame. It's now digging into this 30-minute order block here. I'm not going to switch my bias to buy. Again, we would need to close aggressively above this 4-hour. If price is going to remain bearish, it's going to respect this 4-hour order block, which is these two up candles. These two blue candles right here. Price is going to need to respect that if it's going to remain bearish. I'm not expecting price to make a high of the week today. That was Tuesday, up here. This is the high yesterday. And the 4-hour time frame would be where we drew this OTE from up here. So this is Thursday's high. This is, let's go ahead and mark out Friday's high here. We'll make Friday's high, I don't know, what do we want to make Friday's high? Purple? Why not? Which is interesting because that's relative equal highs up here on Friday's high. Starting to see a reaction now here. A little bit of a pullback in the last few minutes. If you're looking at that 30-minute order block, which we identified at the OTE level. Resist the urge to get into a trade. Resist the urge to get into a trade. Most people are like, OTE, drop it. Fair value gap, drop your order. Daily order block, drop your order. Like, just get in. You do not have to be the first into the market and catch the move. We're looking for 1 to 2 easy low-hanging fruit. We're bearish bias. We're looking for sells. Price has reached our point of interests, our 4-hour fair value gap, our daily order block, a retest of the 30-minute breaker. There are still POIs ahead of us. So you have Friday's high, which is also relative equal highs. So Friday could be a complete reversal of Thursday. So Thursday's high, Wednesday's high. Starting to see a nice reaction here now. You have a 15-minute. What do we have on the 5-minute? We're going to need to see bare minimum displacement back below that 5-minute candle before I would consider taking a position anywhere today. Dollar's reacting after grabbing up. Nope, didn't quite grab liquidity there. I would have expected it to come down and grab that liquidity. Instead, it's respecting that order block. 30-minute order block on the dollar, filled in the fair value gap, rebalanced completely, and now we could see a run up. Euro grabbed liquidity. So again, here Euro making a high above that area. The dollar did not reach below that area. So this could be bullish SMT, meaning Euro grabbed liquidity, the dollar didn't. Euro is going to drop now, and that's also going to pull the dollar higher. The pound has grabbed liquidity, has reached into our daily order block, reached into our 4-hour fair value gap. Did it close in that? Did not close it all the way in. But now we're just seeing a big rejection off of our breaker and our 4-hour fair value gap in our daily order block. And price can do exactly what we thought it was going to do and not give us an A+ setup and not let us participate. And that's okay. It's fine. It's okay. You're not missing anything. You're learning and you're watching and you're building self-discipline. We may not get a setup today. This is like when you're hunting and you can see the buck in the woods, but you don't have a shot. You don't take it. He's moving in and out of brush and behind trees, and you can tell he's there, but you can't take him down because you don't have a clean shot. And you want a clean shot, a clean kill. And we may not get that today. We can tell there's a buck in the woods stomping around in there. And we might have an opportunity to take him down, and we're going to be ready. But we're also completely okay with not getting him today. And knowing Monday we're going to come back out into the woods, and he's going to be here, and we're going to find him next week. No rush. This is not a race to the top. This is about rewarding patience and rewarding self-discipline and having the maturity to be okay with just learning and watching. We're watching the ocean. We're watching the waves roll in. We were anticipating a big wave to come in. And we're standing on the beach and we're watching the water roll. That's all we're doing right now. Beautiful, amazing rejection. Right where we anticipated it, but currently we have no entry. No entry whatsoever. We would need to see this 5-minute candle violated. We would need to see this fair value gap disrespected and violated. And really, ultimately, we would want to see displacement down below this 30-minute candle right here. Heavy displacement, fair value gap, catch a 1 to 2 back up in here. Because price, even though it's rejecting heavily right now, price could just come back a little bit and then make another high. We don't know. We want price to, it's dropping clues where we thought it would drop clues, but it's not providing the A+ setup. I guarantee you there are people out there that trade OTEs and fair value gaps, and they just dropped their order on the OTE and they got in right there when it hit that OTE. And they're in good profits right now. And good for them. That's not how I trade. I want confirmation. Price reached my POI, my point of interest. I don't trade blindly when price just enters my point of interest. I want to see confirmations. I want A+ setups. High probability setups. That's what I want. Great grab of buy side liquidity, a great move back into a daily order block, a great move and a deep dig into a 4-hour fair value gap, a great retest of the 50% of a breaker that hadn't been tested yet. All things that line up with a rejection of price, anticipating a rejection of price. We just didn't get. I would have liked to see one of these candles be a down candle that led up into that we get displacement from, but we didn't get a down. We just had a high aggressive run up. Equal high 75. Yeah, there are. I mean, there are equal highs up there. You've got swing levels here. You've got swing levels here, and those are relative equal highs. This is the relative equal high that I would be more interested in, is Friday's high. If it gets above Friday's high, I would expect a very aggressive reaction off of that. These relative equal highs are way smoother and way more clear than these. These are relative equal highs, yes, but I mean, look at the difference between these relative equal highs and this level of relative equal highs. If price wants to reach for one of these, my opinion is that it would want to reach for these. This is a much clearer level, and it has more fair value gaps above it to try to rebalance. This one has one small imbalance here. It does have some. So I mean, yeah, I mean they are relative, but that's relative equal highs. These are relative equal highs. These are relative. There's two candles right here. They're relative equal highs. But you can see the difference between these relative equal highs, the space between them, the amount of time price bounced around and engineered liquidity here. It makes more sense for people to have their stop above yesterday's high than it does this random spot down here below yesterday's high, if that makes sense. These are swing highs and they do hold liquidity, so I'm not trying to say they don't. You're right in the fact that there's liquidity above here. There are some stops above every one of these highs that people have moved down as we've gone. So yes, there are, but probably most of the stops are up here above this high and above Wednesday's high and Thursday's high. But again, we want to see, so now that we have a big 5-minute down candle here, if price makes another high and makes a deeper dig, and then we get a displacement below here, that's a big enough 5-minute candle for me to identify as a breaker if we got into that. Currently, we have nothing tradable before us, and we're almost 2 hours in, which is about my time limit. I may stay on a little bit longer today, but just because of all the news that's going on, you may not get an opportunity to get it set up. I say news. There's not like a data coming out, but the market could be waiting and anticipating Fed Powell's speech later this morning. Indices, that's interesting. NAS didn't make higher highs. S&P did, and US30 did. Beautiful rejection here off of the order block on the dollar, rebalancing this whole leg right here. Now we're going to want to see a break of structure. We're going to want to see a shift in structure here after this reprice down and rebalance here. The dollar could just respect these order blocks and these fair value gaps like it did on this leg, and it did on this leg, and it did on this leg. So we're going to need to see some evidence that the dollar does want to be bullish today and try to get up into the top of this fair value gap and close at the high of the week. Currently, we have no evidence of that. Currently, we have evidence that Friday is going to be a reversal, and we've just gotten a momentary reprieve of this down move, only to get a rebalance to go lower. So we don't have any evidence yet that we're going to reverse here. We need to see some structure shift. Euro, if we get some displacement here, we could get, this would qualify as a breaker. If we get some displacement below here, we get a solid close below, we get a break of structure with a fair value gap. This could be an interesting euro play, and I'm totally fine with trading euro dollar. I love trading the euro dollar. The pound this week was cleaner to me, and that's why we took all of our trades on the pound. So this is actually more, this is presenting an opportunity. So this is what I was hoping the pound would have done. I don't know if you remember, but I said I wish this candle would close down before we make this stab up so that we can displacement below her and get a breaker right here, which is what euro did. We had a down close candle, then we ran highs. We ran buy side liquidity. We stabbed up into order blocks over here. So now if we can get some displacement below this candle, we want to see a candle displace below right here. And then you're going to want to see the next candle come up, continue down like this. And that leaves your fair value gap right here to target. Like this. So that's kind of what we would need to see from euro dollar. And so it actually has a better chance of creating a setup than pound does right now, because pound would have to come way down here to give us that same setup on the 15-minute. I don't, like, again, this is a big, this would need to make a higher high now. This 5-minute breaker, I don't know that I would trust it. If this leaves behind this big imbalance up here on the 5-minute time frame, I don't know that I would trust this breaker. If we got displacement below here, I feel like price would want to come up and tap into that fair value gap. If this was a 15-minute time frame, I would trust this more. It's 5-minute. I don't really like it. That's why euro may be where our setup plays out today. We'll just watch and wait. This was clean liquidity up here that it stabbed into. Cleaned out all the liquidity here. This was the move down yesterday. People that were short from here, or people that were short from here or here, as price moved down all week, their stops were moved to here, their stops were moved to here. As this broke below, their stops moved down here. Some people probably really tightened it up, but since it's Friday, they were expecting a bigger run, and so maybe their stops are right here. And all this liquidity has now been grabbed, and all of this has been rebalanced. So now price has no more reason to run higher on the euro dollar. If it does, it would be wanting to take out some of these relative equal highs up here. But on a technical level, it's done everything it needs to do to rebalance and grab liquidity. So now we just need to see displacement to the downside, a break of structure, and ideally a fair value gap left behind. We'll monitor this. If this does break and gives us some good displacement down and leaves a fair value gap on that breaker, we'll monitor it. But I like the euro setup that's developing currently a little bit better. Glad we jumped over and looked at that. Five minutes on this 15-minute candle here to close, and then maybe you get displacement and a close down right now on that 15-minute candle. If in the next 5 minutes we get an aggressive move down and we close out right there, then you need the next candle to leave a fair value gap from that breaker, and we might be able to find a trade right there. We can tell the buck's getting close to being in line where we need it to be to take it down, but he's still being cheeky and hanging out in the brush, not giving us a clean look. All right. About 5 more minutes on this 15-minute candle. Getting some displacement now back below after grabbing liquidity. I'm tired of having stuff in my throat, man. Can't talk. It'd be cool if we could get in the next 5 minutes a big push back down and get create a close and a break of structure, and then we would need to see another displacement down A wick fill, yeah, potentially. I mean, you get on the 1 hour. Yeah, I mean, grab liquidity, rebalance price, 1 hour. I know traders that trade that as a shooting star candle pattern, and they would just enter at the close of this candle if it closes out like this, and they would just say, they'd put their stop above, and they would target one length of that candle would be their target. There's so many different ways to trade the market, man. So many people have so many different systems that they use. Reached up into that top fair value gap and into that order block on the 4 hour time frame. This up move created this down move. Here's the high. So this is not your order block. This is your order block. Almost to the body. Just great. Love seeing price react the way it does, man. It's just, it's crazy. It's so beautiful and just a work of art. It really is. And it does the same thing repetitively over and over. Are we going to get a good setup? I don't know. Man, I don't know. I want to get a good setup. This fair value gap right here, we would need to see disrespected. In this order block, this 15-minute down candle, we want to see displacement below it. And that would create a breaker for us because this down candle would have created this move up to grab liquidity, take out an old high, displace below it, give us a fair value gap entry somewhere in here, and get our 1 to 2. What do we have? Just about 45 seconds, and we may get a close below that 15-minute candle. Pound is actually pulling back up. Dollar's rallying back into some to rebalance. Again, we want to see some evidence that the dollar wants to break structure here. And we did get a nice dig down and a good strong rejection off of it, but we have no confirmation that this is reversing now. We need to see a break of structure, a change of delivery. We do have on the 5-minute time frame a break of structure here. Again, I don't like to use 5 minutes as my confirmation, more for entries. The euro, technically we got a close below on the euro, so that's good. So I'm gonna take these little orange boxes off here. So what I want to see is this 15-minute candle come down, leave a fair value gap right here. It can come up in a little bit. I just don't want it to come all the way back up here. I want to see it leave a fair value gap, and I would preferably see it close down here, like this. Something like this. Close below that fair value gap. That's my preference on this next 15-minute candle here. Then leave this fair value gap for us to use as an entry point for our reversal. Break of structure. It's not the cleanest break of structure, I will admit that. we'll wait and see what the next 15 minutes gives us. We just came into the 9 o'clock hour, so we still have 2 more hours until Fed Powell speaks. So who knows what's going to happen? Price can just turn around anywhere right here. Anywhere right here. We're in this inside of this 30-minute fair value gap. We've had a bearish order flow so far today. And because we're bullish on the dollar, we need to see a break of structure on this bearish order flow. We need to see something telling us we're changing the delivery now. The market is changing its delivery. And we just don't see it yet. It's starting to show up here on the euro most clearly. So this could be where we get our entry today, if we're going to take a trade. This does not have to be a down close candle. I would prefer it to be, but it's not my rules. As long as it does, if it leaves, if we've had a break of structure, if it trades back up and closes in here and still leaves a fair value gap inside this breaker, that's okay. We can use that. You can see the dollar reacting off of that 30-minute fair value gap. We got an open at the 9 o'clock hour. It could be putting in a high. So you got an open high, and it could come back down and just fill this wick in. Muhammad mentioned that. On the pound, got a big wick. We could be putting in just putting in a low, and then run that high in this next hour. This is why we wait for confirmations on what we want to see happen. I'm not missing moves because I'm not participating in this run up. It's not my plan. It's not part of my plan, so I didn't miss anything. I'm not trying to capitalize on counter trend trades. I'm trying to capitalize on trading in the strong direction flow of the overall higher time frames, which is currently bearish. Oh, big yawns. So we're getting a pullback now on that euro 15-minute candle. Again, ideally, I want to see it leave a nice little fair value gap right here. I don't want to see it close that in and close bullish again. I want to see it close below this breaker, preferably. That's my preference, is to see it close below this down candle on this 15-minute time frame that we're in right now. We still have 10 minutes, so a lot can happen in 10 minutes. I don't want it to close in this. I want it to leave this right here and close back down here. Then we can get an entry on that fair value gap, and we could put our stop. I'd probably put my stop maybe 10 pips, something like that. And that would be, I did 10 pips, and I did, this is just an anticipation of if we're going to get into this trade. Price has already come up and grabbed this liquidity up here. So it doesn't need, there's no reason for it to have to come back up and take out liquidity here. It's already done it, and it's done it aggressively with rejection. So I don't need price to come back above that level. So You could aggressively, if this works out and we get a trade down here below this candle, you could aggressively put your stop above the candle that created the fair value gap. So this is the fair value gap candle. You would put it above that wick in the body of this candle. That's tight for me. I don't like that. I want to make it feels more protected and safer if I put it back up here where price has already grabbed liquidity and doesn't need to go back up there. If we're going to reverse, it's going to reach into that fair value gap, potentially fill it in, and it could come back up into here. And then there's liquidity, buy side liquidity here and here with an imbalance that we'd be targeting down here for our 1 to 2.2. So we still have 7.5 minutes. So far, price is cooperating. I haven't seen its change of structure on the dollar like we have on the euro, so that's a little pause for hesitation. But we did get a break of structure here. We had a down close, up move, took out high side. This is a breaker block. Right here, breaker block. And I'll make that teal because I like teal from a breaker. So there's your breaker. Currently inside of it, you have this fair value gap. Fair value gaps are orange. So you've got that fair value gap inside of a 15-minute breaker. This is the exact play we took yesterday on the pound, but it's presenting itself on the euro, and I take every A+ setup. This is an A+ setup. We grab liquidity, we have a breaker block. So within the next 5 minutes and 47 seconds, we get a close down here and we leave that fair value gap. I will set an order just inside that fair value gap. %50 of that fair value gap. That's what my target will be. I do like the way this is setting up here. This is a really nice setup. Doesn't mean it will work. We have no way to know if this is going to work until it actually works. So I like 50% of that fair value gap as an entry, targeting the liquidity buy side or sell side liquidity down here. And that would give us our 1 to 2.2. So this is working out really nicely. I'm going to go ahead and get on my MT4 and I'm going to set this up. So in the next 4 minutes, I'm going to get an order set up and ready to go. I'm risking 2%, so that's $200. My stop would be, wait, 174. Oh wait, my entry would be 08. Come on. Why is this not cooperating? Hello? Do I need to restart this? Let me restart my MT4. Getting massive displacement down now. I want to see it come back up in the next I don't know, 30 minutes, give us a retrace, a pullback into that breaker. All right, let's see if I can get this to work now. Let's get our lines up. Come on, here we go. It is not letting me move. All right, what is going on here with this trade manager I have? It's not working properly. And I don't know why. I may have to do this manually here, unfortunately. So 3 minutes, we're getting a massive displacement down now. Your dollar is getting massive displacement. We're about to get a break in structure here on the dollar. Pound also setting up nicely. We've gotten displacement now on this 5-minute candle that we had talked about. It's leaving, looks like it's going to leave a fair value gap inside there too. So that could potentially be a really nice setup as well. But because of this big fair value gap up here, I don't really like it. I like the euro setup a little bit better. Looks cleaner to me, looks nicer. Unicorn inside the fair value gap inside of a breaker that it's grabbed a significant level of liquidity there. But I can't get my stupid trade managing expert advisor to cooperate. And I don't know why. What the heck is going on with that thing? All right, well, this is a 9-pip stop, so we'll just do this the old-fashioned way. If I'm risking $200 on a 9-pip stop, that would be basically a 2-lot. On the euro dollar here, 2.2. So I'll probably make that 2.1 lot size. So that kind of sucks. I don't know why. I'm gonna have to spend some time today and figure out why that's not working. Looks like my dogs are coming down today and they need to go out, so I may have to pause here in a second. Let me get this trade set up before we do that. We're going to use a sell limit, and we're going to use 2 point. Oh, stupid chicken. My dog has a squeaky chicken in its mouth. All right, I'm going to have to let them out real quick, so bear with me. I'll be right back. All right, we're back. Sorry. I did get an order set on the euro. So we're targeting the fair value gap at right here. 080. And the stop is 175. So 9.5 pips is what we're using here, and we're targeting 07886. That's what we're targeting. Actually, we need to target a little bit lower to cover that, so we're going to target right there will be our target. If it comes down and grabs this before we get an entry, I'll cancel this order and we'll look for another setup, because we could still get some displacement down here off the pound, and this would become our breaker, and we could have the similar setup situation. We're getting a break of structure here. We're going to need a close above this level. It's currently disrespected these bearish order flows, and so we're getting a change in delivery, which is what we were anticipating. So now we just need price to cooperate and give us a little pullback, and so we can use this breaker inside this fair value gap. That is a beautiful, beautiful setup. Let me change my profit target here. I had to restart my PC because nothing was working. My keyboard wasn't working. I couldn't type. I don't know what the heck's going on with that thing. 0787 is the new profit target. All right, so that's kind of what we're waiting on. While that's playing out, I'm going to try and get this computer to work again. I don't know why it's not. So it's letting me type, so that's a good sign. We'll let it load up. It's going to take a minute to load all the things that it does. Ideally, as I'm looking at this euro trade, it doesn't have to get it up on this candle. It doesn't have to get up on the next candle. In fact, we could close out the hour below here, and then we close out the hour somewhere inside of here and leave this sell side liquidity, on the next hour you get a bump up that then takes you down. So this is part of the waiting. We have identified where we want our buck to appear, so we can take our shot. So we'll just wait and see how that all plays out. Get rid of all that. All right, let's open up MT5. Let's see if we can get this to work now. If I were to put some lines on here, can I move? Hey, now it works. Good. Okay, cool. It just needed to all be restarted. Good. I would hate to have had to do some intensive work on my trade managing software there. Now we're just watching. Again, if price violates these lows and grabs this liquidity before it makes its run back up to rebalance this, I would probably cancel this order. See how the dollar has broken above and already grabbed liquidity here, and the euro has not? A little disconcerting. They're not. This is making a higher high, and the euro is not making a lower low yet. So What I don't want to see is the dollar grab liquidity to run lower again. I want to see it. I want to see a convincing close on the dollar above this structure level. It would make me feel way better about what we're looking at right here, because currently the pound is still just respecting bullish order flow. We would need a close on the pound below this level before we would consider a change of delivery. We need a close on the dollar above this level. We haven't gotten a close above the dollar on that level. This is a close below this breaker on the euro. The euro has given us the cleanest and clearest hint that we had a run up, displacement up to grab liquidity, displacement down, and we've left fair value gaps. I'm targeting this entry here. This fair value gap is what I would like to see, a fair value gap inside of a breaker block. 15-minute breaker, fair value gap inside. It is a unicorn setup. So nice. It really is a beautiful setup. Change of delivery in line with our higher time frame bias. US30 setup I called out is still in play as well. You had an hourly break of structure, fair value gap, this hourly order block with a fair value gap. Would be a great entry if it's going to go higher. I don't really want to see the indices run higher if the dollar is also going to run higher. If the dollar is going to run higher, typically that means the indices are going to drop lower. And that means the dollar, if indices are typically running hot and running high, the dollar is typically selling off. So again, I want to see a close above this structure. I want to see a clear close above that structure. If we don't get this entry and we get displacement below this breaker, this would become a breaker is here. So you've had this down move, up move to grab liquidity, take out an old high. You get displacement below, and then you could look for an entry here and then target some of these lows. But I really like this change of structure right here. Pop up, slap us in, and give us a win. Mohammed, what do your friends and parents think about your trading endeavors? Do they know about them? Have you told them about it? Are they supportive? Do they think you're crazy? What kind of reaction have you gotten? Do you know are any of your other friends doing this with you? Or are you the only kid around that's trying to figure this out? If you're still here. Haven't looked at Bitcoin in a few days. I don't trade crypto, but I like to see that the same principles that apply in other trading instruments, they play out in crypto as well. Look at this. This is a beautiful breaker with a fair value gap on the 4-hour time frame. So you had this run down, you had a run up, cleared out an old high, rebalanced into a fair value gap, displacement below. It's not a true fair value gap, but this wick is so long. It's one of those implied fair value gaps. Came back up into the body of that breaker, and then a significant runoff. You have relative equal highs, which I would think might be an interest of buy-side liquidity here on your 4-hour time frame. If it wants to go lower, it's already grabbed some liquidity down here. So it's already grabbed the sell-side liquidity. If it wants to continue to go down, it may want to run up and grab some of that buy-side. There's going to be stop if people are short on Bitcoin right now. Their stops are going to be up here, and so may want to run up, grab some liquidity to run back down into this. What is this? A weekly volume imbalance? Weekly fair value gap? No. Is it a daily? Daily order block. That's what we got. Daily order block. On the 1 hour, it's just in a massive consolidation range. This is the 4-hour range, and you're about halfway. You're at the 50% point of that, so you wouldn't be looking to take any trades. You want to take trades if it's in a range. You want to take trades in the upper 75% or the lower 75% of the range, and you don't want to just try to find random spots to enter in the middle of that. So until I see a buy side run, I'd be looking for a run of this liquidity and then a breaker to get back in on the downside. We're just watching here. Looks like we're going to get potentially a run of those lows and have to cancel our order that we have set up. But that would still leave a play here for the pound. Be interesting to see this 5-minute breaker, how that plays out. You have a fair value gap inside of a 5-minute breaker after you've run buy side liquidity, daily order block, and a retest of the breaker. This may be the entry that we should have set up. The reason I would hesitate to do that is because you do have this imbalance up here, a run up and a run down. This would all want to be rebalanced eventually. So that is an interesting setup. I'm going to leave that on there just as a kind of demo paper trade idea to see. Again, I don't like to use the 5-minute as confirmation. I like to use the 5-minute as entry. I want to see a change of structure on the 15-minute, and that would mean this level needs to get traded through with displacement. But just for testing purposes and because it doesn't fit my quality, I'm just going to leave it on there and be like, hey, what would have happened right there? And I'll use it as a data point. I really want to see the euro turn higher in the next 30 to 45 minutes to get us back up in there. I don't want to see it run these lows. If it does, we'll have to cancel our order. This would then be the 15-minute breaker that we would be using if we get displacement low here, fair value gap back into this. But with these fair value gaps sitting up here, and again, you would expect price to want to come back up here because you had aggressive run up, aggressive run down. You want to rebalance something in here. And this makes the most sense for my setup right now. So dollar, we did technically get a close above on this candle. We got a close above that swing high. It wasn't a super strong close, but it was a close. And so here's your fair value gaps to target for the dollar to retrace so that it can run these highs and rebalance some of these imbalances up here. Doesn't have to make a new high of the day, but if it's going to turn and reverse and give us a true change of structure, you're going to see it pull back into this and then run up. Something like that. And that would be in line with our, to get triggered in here, we would need that dollar to pull back into those fair value gaps and rebalance. But remember, the dollar has already taken out the reverse high, that swing high here on euro. The dollar's already taken that out and closed below it, and the euro has not. So they're not moving perfectly in conjunction with each other yet. Pound is reaching back up on the 15-minute time frame. This is that 5-minute breaker, run up, break, displacement, fair value gap. Price is fractal, but the lower you go, the less how do I want to say that? The less accurate, the less I trust it. This could work out. This could work out perfectly, but it may not. Maximum I'm staying on here is till 10 o'clock New York. So that's about 25 more minutes is the maximum I will stay on here. And I'm getting off. 3-hour stream is plenty long. So these highs got taken out, but these lows on the euro did not. So if the euro takes these out, I'm canceling this order, and I'll probably just not take any trades today. I'll place another 0.01 lot size to keep day 2 of the 3-day minimum in place. This paper trade is looks like it's approaching entry here. Again, I would not be taking this because the 15-minute has not had a change of delivery. For the 15-minute to have a change of delivery, we need a displacement below this level, or if this creates a new level, a displacement below this level, and this would become a 15-minute order block. So I'm not looking just to randomly get in right here on a rebalance of this fair value gap. But the thought process is that on the 5-minute time frame, this is a 5-minute breaker. Down move, aggressive move up, take out buy side liquidity, aggressive move back down with displacement and a fair value gap inside of a breaker. So if this were on a 15-minute time frame, I would 100% be ready to trigger that trade. But this is on the 5-minute time frame, and I do not use 5-minute time frames as confirmations, only to refine entries. So that's why I'm not about to get triggered into that position right there. I really want to see the euro pull back up into here. This is our trade. We have a limit order set right here inside this fair value gap on the 15-minute time frame. In conjunction, this 15-minute fair value gap inside of this breaker, 15-minute breaker. We had a down close candle. We had an aggressive run higher to clear out an old high and grab buy side liquidity. And now we've had an aggressive displacement back down, and now we want to see price. If this candle closes up, and then you know the next, basically this hourly candle closes up here. So let's look at this. If this hourly candle closes up here, the next hourly candle, what's it most likely to do? Open, high, and then low and a close. So that's my anticipation. 30-minute time frame would include, if this just displaces down below here, we would cancel this order, and then this would be our 30-minute breaker. And you could look for an entry here inside this fair value gap to target a 1 to 2 down here. To me, this is the primo setup though right here. Just going to wait and see if price responds and gives us our one shot, one kill entry. Oh man, I do not like sitting at charts for this long. 2 hours is kind of my maximum. I want to see a setup in the first couple hours. Set my limits and get away from the charts and just go about my day. All right, if it clears out this sell side liquidity here, I'm canceling this order. I really wanted it to come back up. It still may come back up, but now it's just too messy for me. It's too messy. That 5-minute, look at that. Tapped in and just rejected hard. It's cool to see. When you can analyze charts and you know where price is most likely to have an aggressive reaction away from, and you see it play out. It's a great feeling. I'm not even in this trade, and I feel great about that call. I feel great that I didn't take that trade because it doesn't fit my system. I feel great that I said this could work out, and if it does, this is where it's going to work out at. And it currently is almost 1-to-1 already. So that's cool. I like it. Dollar is now aggressively moving up and getting a stronger close above this level, moving into this fair value gap. So we are now changing structure on the dollar delivery, which is beautiful to see. That means the euro is taking out these lows here. Which means I'm probably going to, oh man, look at that US30 getting slapped. Again, this is why I don't trade US30 right now. It's just ugly. NAS is running, S&P is running. US30 is running. It just grabbed that sell side liquidity first. Pound is looking good on that 5-minute breaker. Euro is taking out that sell side liquidity. So I'm going to go ahead and cancel that order. It moved further than I wanted it to, but what it is doing is we're getting displacement below this 30-minute order block, this 30-minute breaker, which is also a 1-hour breaker. So may get another opportunity there. Use this as your down move up, grab liquidity, displace below. Same story as we saw here. You would want to see displacement below this candle. You would want to see a fair value gap left behind, which currently there's nothing inside of there. It's actually up here, which means the 30-minute is the more likely to be respected. So if you get a displacement below and you get you could target that potentially as an entry. But that means you got to put your stop way up here. Kind of where your original entry would be. And you would need to do something like that. But that's not even valid because we still need some displacement below this close here. Ideally. $15 more minutes and then I'm going to be getting off the stream today. So we're probably not going to get a setup while we're on here. And I'm going to turn off my charts. I'm not looking to force a trade today. There's plenty of opportunities upcoming. I am going to probably go and put a 0.01 lot trade on this and wait for just to kind of keep that going. So that's 2 days of trading on the clock for phase 2 on micro lots, just to keep the clock ticking. Keep the account balance set there at $10,000. I'm going to see, because whenever you place a trade, you immediately go into drawdown, and I'm waiting to see if this micro lot will actually go into profit and keep it right at 10,000. It's currently 7 cents below 10,000. A little push down on the euro would get it back to that. Get those 7 cents back. That's just a pride thing. Seeing clean zeros across when you actually take your first legitimate trade. Here we go. Back, so 10,002 cents is where we sit at after 2 micro lot trades. So I'm going to take off this trade, and I'm still going to leave this area up here because if you get a pullback, that's still a valid entry point. But I'd be more interested to see if we get some displacement, a close below here. And then this becomes a breaker. If you get a close below, you have a fair value gap and you have your breaker. So you could still get an entry if you're going to sit around and watch the charts for another hour and a half, which I'm not. I'm tired of it. This was my A+ entry. The 5-minute one also would have been beautiful, but I don't. Again, that would have been a confirmation trade, and I wanted that to be an entry trade. I don't like... That had just as much chance coming back up in here and rebalancing this as it did working out. But it was ended up being a great move. on that 5-minute time frame. It would need to get down into here to move to break even. And then you can see it lines up perfectly with this fair value gap and this sell side liquidity to hit our 1 to 2 there. So that's kind of cool. Again, I love watching price play out, and I don't feel bad that I didn't take that trade because, again, it doesn't fit my system. But it was pretty setup, even though it's on lower time frame. I just wanted to see a change of structure on the 15-minute first. So if this candle trades below here, it is creating a high probability setup on the 15-minute time frame, and the fact that this blue candle, this up candle right here, would be in a 15-minute order block now, a bearish 15-minute order block, and it would line up with a bearish breaker. So you had this move down, up, you get displacement, close below here and here, you have an order block and a breaker. That's just like having a fair value gap inside there. So you could still work to utilize that area as an entry to get a 1 to 2. Accuracy is what you're shooting for, and you're most accurate when you're being very picky and choosing high quality setups. But this was a great setup right there. You are getting a close here now below. If you could get a close in the next 10 minutes below here, this is your 30-minute breaker, and you have a fair value gap up here. You could target something like this. That could be your target on the euro dollar right here. I'd probably make it 10 pips. Put it above the high of that candle. But you need a close. You want to see it close down here. All right, 10 more minutes and I'm going to get off of here. Just wait and see how this candle, this hourly candle, closes out. This is not a trade. This is just if you get a close below here on the 30-minute, this would be a potential entry and a valid setup. And on the pound, on the 15-minute time frame, if you get a close below here, this would be a 15-minute bearish order block. So you could look for potential entry around here. If we're going to stay bearish, we may not. We may not stay bearish. I would love to see this not play out, only just so I can say this is why I don't use 5 minutes as confirmation. I use 5 minutes for entries. Not that if you're in that trade, I won't hope you lose, but just as an example of how and why you have to stick to your system. Dog's freaking out again. Just like they did yesterday, right on time. This is why I wait for a change of structure on the 15-minute, because we haven't had a change of structure on the 15-minute. This is why I wait for confirmation there. That's why 15-minute is as low as I will go for confirmation of a structure shift. That's as low as I'll go. But because it's already grabbed liquidity from here, that's why I canceled our order that was up here earlier. It already reached liquidity. And so it could just be using this liquidity as a reason to run higher today. Which would have helped me avoid. I wanted price on this candle. I wish it wasn't as big. I wish it would have been somewhere around here and then just swung back up, got us in, and then grabbed that liquidity, and we could have had a nice win. That's what I wanted it to do, and it didn't do it. It did reach into and exactly where we laid out all morning, where we said price was going to go, into our daily order block level, into our 4-hour fair value gap, into an OTE of the 4-hour, into a breaker block. Like, we had so much confirmation that price was going to reject right there. We just did not get a good entry to capitalize on any kind of big down move. And we still haven't had a change of structure on the 15-minute time frame. We did on the 5, and you could have gotten a 1-to-1, but we wouldn't be at break even right now according to my system. And so it's back at entry, and it could just as well run up and grab into this fair value gap like I said it could, which is why I don't use the 5-minute time frame for confirmations of change of structure. Only 15-minute is as low. You can use 1 hour, 4 hour, 30-minute, but 15 minutes is lowest I'll go to confirm a change of structure. So until we get a close below these candles, this isn't a change of structure on the 15-minute here. It is on the 30-minute. We have had a change of structure on the 15-minute right here. Breaker structure, breaker block, fair value gap, order block, all those things. Price could come back up to our original entry. I'm not going to take it because it's already swept sell side liquidity. And with 4 minutes left, I'm going to go ahead and call it right there. Good luck on the rest of your trading today. If you're going to try to check a trade, be careful. You have news coming up, Powell speaking, and that's going to affect dollar pretty heavily, potentially. But yeah, man, use this weekend. Get away from the charts. Do not stare at the charts all weekend. If you do, just do like an hour back test session or whatever. But get some rest. Monday's coming, and we'll be back here live at 7 a.m. Monday Eastern. And hopefully be able to find a good setup or two and pass this challenge sometime next week and get funded. So we'll see how that goes, but y'all enjoy your weekend.